Hello, welcome to Al Stock Trades. How is everyone doing today? Please let me know if you can hear me. We did a couple of tune-ups to our studio, and we are ready to rumble. Okay, so a couple things happened since I've been gone. We need to talk about and discuss. The Federal Reserve today just increased the interest rates to approximately about 75 basis points, which makes the federal funds rate now effectively 1.6 percent. So if you can go ahead and subtract that now from the Treasury that we have in our indicators, a lot of interesting things start to happen. So we are now flirting with a recession, and there's I'm certain without a reasonable doubt there is going to be a recession. Hey, no, how's everyone? How are you doing? It's a privilege. I hope this microphone sounds clear. We updated the studio. It looks fabulous. Let me give you guys a direction here. So just to kind of show you the 360 of what's happening here and how we have it set up. But with that, there is some good news. Now, first, I want to set up and start this video sharing the screen here. Okay. But I want us to talk about this specific thing right now. So I understand the markets are down right now, and it's really hard to find good deals. However, if you use the link down below, you guys can get now 10 free stocks from Moomoo. You heard this right. 10 free stocks. Now, an additional 5 free stocks with any deposit. So 10 free stocks. I mean, guys, think about it. Okay. And a lot of the stocks right now are undervalued. So it's more money than what what it is going to be in a bull run. So I'm going to go in. I'm going to put the link down here. There'll be a link down below if you're watching this on replay. Let me go ahead and highlight it and show it on the screen. You use this link and you deposit any amount and you get 10 free stocks. I spoke with them and I told them your deals are not as good as Webull. Now, their program is better than Webull because they have all these indicators that you can use. But, I wanted to provide my subscribers a good deal. 10 free stocks, all right? Freaking amazing. Exactly. Moo, right? Exactly. Right? You give us 10 free stocks, I'll moo the crap out of Moomoo, right? Oh, you know what I mean? So go moo your way to 10 free stocks, okay? Because it's free freaking money, right? That could pay for freaking gas, which is like it's just gold, liquid gold now. All right. So let's go in and let's get straight to business, okay? So let me go ahead. So this is the economic projection from the Federal Reserve Board meeting from June 2022. I'm going to teach you how to read it. You have this is the change in GDP. This is what they're projecting now. And the beautiful part is this was their March projection. So it's so nice. Well, thank you, right? So I don't have to look up the papers from before. Now, if you want, there are other projections from the past, then yeah, you're going to have to, but you don't need those. This is enough. So what do you see here? March projections, the biggest difference here is that there's a change in GDP growth. Not so much in 2024. 2024 is okay. 2022 and 2023, GDP is decreasing, okay? So that's not good. I want you to also focus on unemployment rate. Now, unemployment rate was going to hover anywhere in 2023 between 3.5 and to 3.6 in 2024. But if you look at it now, it's now in 2023, it shot up to 3.9. And then 3.6 in 2024, it shot up to 4.1. What this tells me is that most likely the recession is going to start either Q2, Q3 of 2022, or even a little later. And the recession is going to end either the end of 2023 or the beginning of 2024, which is why if you look at my Clover price projections, let's see if I can pull them up here. If you look up my Clover price projections, I specifically stated we are going to go anywhere between 2024, 2025. Let's see here. Let's go to Switch accounts. All right. So if you go ahead here now and look at the PCE inflation, obviously they reset it to the topward side. It's upwards. But if you compare it, it's really not that far off from 2023, 2024, because they're making the necessary, 2022 is a year to just fix shit up. Okay. They're just trying to fix shit up. Okay. That's pretty much where we're at right now. All right. Go ahead and type on Clove for the people that are interested in Clover Health. Let's give you the price target projections on our Discord here. So if you go here, you can see that these price projections, I have them in 2024 to 2025, right? Which is right in line with the economic projections of, one thing like right around here, 2025. We see that unemployment rate is going to increase. We're already seeing that we're already starting the markets taking care of it at this point. But overall, it is going to be a sour 2023 and beginning parts of 2024. I think 2025 is going to be a mega year. 2026 is going to be a fantastic year. And then we will see what happens in 2027. Okay. So there's that. Now, how do I know this? Well, the Federal Reserve FOMC creates these dot plots. Okay. And what these dot plots do is that we're able to see kind of where the midpoint target range for the federal funds rate, which is effectively the interest rates that they set up. Currently, they're going to increase the crap out of it up until that 3.5, 2 point, over 3, right? But what do you see here? We're going up, and then all of a sudden we're starting to go down. So what this tells me is that they're going to increase to a point where they're going to get up so high that they're going to end up having to go down because the federal government can't handle the interest payments off of all the debt that they accumulated. Now, some person posted on, I forget who, about this YouTuber, but he's not a YouTuber. He's a licensed professional tax accountant. He's a CPA. His name is, I believe, I forget his name. His YouTube name is Clear Value Tax. I recommend you watching him. It's very nice. Clear Value is he pretty much explained this projection, which is this is what he was trying to explain with the graphs here. Meaning there's going to be a big crash coming, right? And questionable. And then there's going to be a humongous rally. And once these interest rates are going to be humongous, okay? So there's that. Okay, so I'm going to explain to you guys what do I mean by this humongous fungus, okay? Humongous fungus rally, okay? So on our Mastering Stock Market course, I've uploaded this Federal Reserve variable shifter. Now, what this does is it's going to cut through different time points. It's going to cut through time points of increasing interest rates, tightening cycles, and 0% interest rates. So this 0% here is like the COVID pandemic. So we're going to go ahead and go through it really quickly. So all you got to do, if you're a mastering student, you go down and you just start scrolling. And what that's happened is it's going to scroll and it's going to show you the Treasury yield curve. It's going to show you the housing 30-year fixed mortgage rates. It's going to show you the S&P 500 and also the dollar. Okay. So the Federal Reserve right now, we're slowly, the Federal Reserve is talking about tightening, right? Then they're setting expectations, and then they start tightening right around here. So as you can, I'm scrolling down. You can start to see. So now the Federal Reserve has started to tighten, and these are the this is like the federal funds rate, right? Every time they start to tighten, you can see the markets actually started improving. The S&P 500 started increasing because we're in a period of essentially 0% interest rate, right? And the market wasn't really doing anything. So we started increasing, okay? And more so, I want to say value was the winner during this time. Now, I don't have, I could get the data right now, but I just don't want to prolong the live. But if you look up here, growth versus value. In fact, here it's 2018. If you go here, anything below 1 is value. Anything above 1 is growth. And as you can see here, if we can zoom in on the Federal Reserve tracker on 2016 to 2020, we go right here. 2016, where are you? Right there. And let's zoom in. We can see that it was all, 2015, 2016, 20, all the way to 2019 right here. We started a shorter cross of 1. And as soon as we started the crossover 1, growth became the winner. And now growth is slowly coming down. You can calculate it back to its historic mean. But overall, during these processes of increasing in essentially the basis points, value becomes the name of the game. Okay. So I hope that's clear. Again, it's below 1. I explain it here. Greater than 1, growth stocks, while numbers below 1 favor value stocks. And how we calculate this is we take the Wilshire large cap growth divided by large cap value. Okay. So there's this. Okay. So during times of tightening, value stocks win. Okay, so let's continue going. So February 13 comes along, 2018, and then all of a sudden, the stocks are doing well. Interest rates are, as you can see, I mean, look, I want you to focus on interest rates right here, right? Interest rates are going up, right? So then 2019 happens, and we start seeing the 10-year inverting from the 2. We start seeing that inversion. You remember when you were trading, I don't know how long you guys have been in the market, but for the veterans that have been around before 2020, right, before everyone got locked down, I remember, I'm sure you recall, everyone was talking about inversion of the yield curve. Well, this is exactly what they're talking about, inversion of the yield curve. And that's when people started listening to Cathie Woods. Okay. So then the Federal Reserve started to, as you can see here, right there. Look at that. The Federal Reserve started to 2019, right around there, they started to loosen up. Now, let's go back to our graph here. Now, this is the same thing. You can get the Vanguard growth of ETF divided by the value. Again, we're using technical analysis, not for individual stocks. We're using TA on the whole ETF here, okay? This is a very sophisticated way of using TA, which we'll teach in our mastering. Again, we're combining fundamental and technical analysis, right? This is the big boys, right? This is how they do it. And as you can see here, this is the this is the simple moving average, or I call it the moving average, right? And whenever this line here is above the blue line, it signifies that growth is going to outperform. If it's below the blue line, it signifies value is going to outperform. You understand what I'm saying here? So right when the Federal Reserve and our Federal Reserve tracker, they started to loosen up, we started to see right here in 2019, we start to see growth started to take into effect. Now, you can go in, look at Tesla, look at their free cash flow positivity, their net income, the fundamentals were sounding, and now the technicals started to meet the economics started meeting up with the technicals. Okay? So once we start, I recommend you going back because I'm going really deep in this. I'm going deep, guys. I'm going deep. We may have to repeat this in a couple videos to drag in the point, but this is deep, right? Again, the Mastering Stock Market course is going to be heavy, but hopefully we can break this down together. All right, so as you can see, now once they started loosening up, they start, growth was winning, right? Because growth was above this blue line. But check this out. Now we're going to drag down more, and now they've loosened up even more, and now we're in 2020. We had our first COVID case, and then the pandemic came, lockdowns, and look what happened. Look what happened to the yield curve. Look at that yield curve right there, and then look at the stocks. Boom! Stock market crashed. Right? It was a huge crash. It was like blink of an eye, right? And then the interest rates were lowered. Federal Reserve made it 0, and now look at the mortgage rates. Housing became super expensive because the interest rate started going down. The stock market went into a fusion frenzy. it was going up and up and up and up and up. And now we're finally getting to a point where the Federal Reserve is going to start tightening. Okay. And as you can see, 2020, they made it zero. And look at 2020 here. Look at that. Growth took over like no. Now, you could have used this graph and you could have gotten out of growth stocks right there. And you could have gotten out of growth stocks right in October, November. Remember when, Clover Health did their share dilution? They did it right smack in there. Okay. And they said it, things are going to start becoming uncertain. This was a deep break in the technicals regarding value started to win, which is why I made that video of ExxonMobil. I said November. Okay, so now let's go ahead and take a look at November of 2020 right here, November of 2021, right before January of 2020. Let's look at November of 2021. Right there. Look at that. We started going down. But if you look at, now I want you, again, if it's below the blue line, if it's below the moving average, then growth right there, growth is going to win. I'm sorry, value. I'm pointing out value is going to win. Now look at October, November of 2021. Look at it right here. There's right there. October, November, right there. And look at now a value stock, ExxonMobil. Boom, and went up. You see how you can use technicals with fundamentals, okay? So I hope I'm making sense here, okay? Ask questions if this is very important. So let's go back to the Federal Tracker. So let's do more education. Let's go down here and let's look at previous tightening cycles. This was right before the housing market crashed. Again, you could have seen it if you understand this, right? That's why they say knowledge is power. Federal Reserve started increasing interest rates. The stock market was, not more. The housing market was getting hot, right? Interest rates started to go up. People stopped being able to afford the payments. And then we started getting extreme, I believe an inversion happened where the 2 above the 10. And then interest rates were extremely high, which is what we're going to right now. But yet the stock market was okay before, obviously, the crash, right? Now we can go a little bit deeper. We can go in 0% interest rates. Now, this is, an uneven easing. This is a little bit more complicated. We'll go over it on the course. But look at the 0% interest here, right? Right. So stocks still do well, as you can see, but look at the housing. Okay. So why am I showing you this? Like, I don't like to waste your time. This is why we're going into a period of tightening. Then, right? Period of tightening, which is in this one, right? And then we're going to go in period of easing, which is 2024 in the long run. Just look at Elon Musk. He said he thinks the economy is going to do good in 2025. You have to understand that he studied economics too, Elon. He gave a commencement speech and he said, if you understand economics, physics, and know how to work with people, you can change the world. It's true. Okay. You got to understand economics. Growth stocks are going to have their day in 2024. But here's the thing. What do? Do you not buy? Do you not dollar cost average? Well, that's stupid too, because, well, you're going to end up missing these. You're going to end up missing these prices. Why is the SoFi was that CEO buying all those shares? Because it's extremely undervalued. That's the fundamentals. But the technicals and the fundamentals sometimes don't meet up. But when they do, you'll have an explosive environment. So here's in our mastering, you'll see the growth versus value, and you can press this link to get this exact image and work with it on the TA here. Okay. Now, if you look up large caps versus small caps, we are seeing, again, look at this here. October, large caps crossed, or the line crossed the moving average, meaning that small caps are going to win. Okay. So let's just look at this. I want you to look at Netflix. In October, look at Netflix. There's October and Netflix. It's a large cap. Boom, right? It started to crash. Okay, again, large cap. Again, this is dividing out the ETF for large caps versus small caps, okay, for Vanguard. And then you do a moving average and you look at some technical indicators. Large caps topped out at around October, November of 2021. They topped out here, guys. They topped out. Once they crossed this, we thought they were going to recover right here during in March and April. We thought they're going to recover. But they've been literally on a zigzag. And now the battle is, are small caps going to take over? Okay. Next thing I want to show you is that for the longest time, this is taking US stocks versus international stocks. When the price action is above the moving average line, US stocks outperform. However, this trend will not continue to perpetuity, to infinity. It's going to die out someday, right? Could it be that little drop right there? We don't know. I'm telling you, at this point, I don't think so, but I'm just giving you guys this right now. Start learning how to evaluate stocks and learn how to analyze them so you can start attacking international markets. Because this trend where the US wins, a lot of countries don't like that, and they're starting to shift it. I got freaking American flags behind me, right? I want America to win. I know Europe wants America to win. But so I want us to win. But understand, you got to listen to Ray Dalio, right? Learn and follow this trend. And if you want access to this here, it'll be down there so you can follow it to perpetuity. Now, this is a good recession predictor. For the longest time, every time the red line and the blue line, which is the 10-year minus the 2-year and the 10-year minus the federal funds rate, goes down and hits the black baseline, we get a recession. Hit it a couple, and this is a good signal. Sometimes 3 years out, recession. For the first time ever, I've never seen this. The federal funds rate is up, and this is the 10-year minus 2 is down. It's like, what the hell's going on? Now, as they increase federal funds rate, then perhaps maybe this might go down definitely as a recession indicator, which makes sense because the federal funds rate is going to go in. So what I did is I also put together this graph, and I call this a recession sniper. All right. Whenever you start seeing this, you want them to fan out like this. But whenever they start tightening together, think of it as a bullet going towards your freaking portfolio. Recession. Tighten. These things start to tighten up like a bundle. It's a bullet going through your portfolio. Recession. Well, guess what? We see it right now. It's starting to tighten up right here. So here comes the bullet, right? Luckily, a lot of small caps have been hit. Okay. So I gave you guys a lot. I usually don't give this much because I've been so focused on so many things. Now we built the studio, and now it's time to show you my 10 years of experience. It's time to show you guys what's going on and get into this YouTube finance space and help retail investors. Okay, it's been moved from Minnesota, it's been a freaking hell. All right. Now, again, I want to just remind you guys real quick, if you want 10 free stocks, please use the link down below. I'll even put it down here again. 10 free stocks with any deposit. Get those 10 free stocks, sell them, and go get yourself some gas, okay? So, because it's going to be even more expensive. All right, so get them 10 free stocks. All right, let's answer some questions. Yeah, kind of somber, huh? Talking about a crash doesn't bring comfort to longs. No, but you have to understand, if you're long, then this graph should give you comfort because this is time, right? 2022, 2023, 2024, and it's going down. So I recommend rewatching the video because I explain what happens when it goes down. Growth stocks tend to outperform. I need a platform to trade on. Which one is the Webull. I know people don't like Robinhood, but Robinhood's easy for beginners. Let's face it, guys, it's pretty easy for beginners, Thinkorswim I like, but I personally have been getting into Moomoo, and I think it's a great start. There's a lot of education. There's a bunch of free shit like technical analysis indicators, and you can set up nice alerts for yourself. And they have a good customer service line. You could 24/7. In fact, the lady I message her and she messages me back like fast. You know what I mean? So she's, these people, um, they're good. I mean, 10 free stocks too. That's good too. Us Americans, we like them 10 free stocks. So you give us this, we're gonna sign up. I can tell you that. All right, you give us this, okay. We're gonna pause our day to sign up here. That's 10 free stocks. Okay. All right. So yeah, we're recording here. Here's my question: why hold Clove if there is going to be a market crash you speak of? Well, you have to understand. Right. Again, this is where you have to meet the technicals versus fundamentals. Right. Fundamentally, you have a business. Now we're going to move away from the lines and all that jazz. Think about it. You have a company that's about to make $2 billion this year. 3.4, they said. All right. They're trading currently below a $1 billion market cap, I think, right? So there's that. They're about to become free cash flow positive and net income positive next year. So they're going to be profitable. So they're going to add value to your shares, and they're going to be growing faster than the rate of inflation. Right? And they're discounted to oblivion. That's why I'm holding. But again, you got to do your own due diligence and see what makes sense. You can, for me, I'm not selling. Why would I sell at 2, then buy back in at 3 or 4 or 5? That's stupid. What else am I going to do with my money? Right? One of the new SPACs I bought filed for bankruptcy. Which one? I'm sorry to hear that. How long will it take for the Twitter deal to go through? I haven't been on top of that. It's been quiet recently, honestly. I would have heard it on the news and or indicate what we have in our Discord, but I'm not too sure. I can't come. I don't have any intellectual things to say yet, but I'll do my research. I'm putting some money in Twitter for a 42% return if the deals go through. Oh, hell yeah. Mount Elon put forward. Yeah, exactly. But we'll see. Elon's kind of a, he can be a little bit of a, what's the word people say? A troll. So you got to be careful. You don't want to lose money. A lot of people lost money on Elon's words. It's like Dogecoin. People bought it at like 70 cents. There's a YouTuber called Chicken Genius. I felt really bad for him when he got, messed up with Meet Kevin and all of them. But if you look at his past videos, he recommended Dogecoin. And he made this song saying Dogecoin is going to the moon. It's like, what the fuck is this fucking stupid? So stupid. I don't know. Like, freaking Dogecoin, seriously? So imagine people that bought right before Saturday Night Live. I mean, just imagine people that freaking bought and they held, right? Just so stupid. I tell you. Okay. I don't know why I still held it. Oh, I'll take a look into it right now just to see. What is your opinion on crypto as a whole? Yeah, I got to make a dedicated crypto video because I don't think it does its service by lumping it up with the Federal Reserve. But if you, in fact, actually, you know what? Let's go here. So let's go to our crypto land. So for crypto, we do have crypto breakout signals. It tells you when crypto is about to break out or break down. But if you go to crypto land here, and let's do some technical analysis through our AI through the minute chart. And then the hour, the day, and then the week. Let that load. So the thing is, right now, a big level of support is at $19,000 approximately dollars. If it breaks that, I'll see you guys at essentially $13,000. Okay, so understand, a lot of these dumbasses who make these videos don't understand technical analysis that well, and they're once it crashed at 37, get the hell out. Once this happened, it crashed. Okay, good. You could rebound here, but once that fell and there was no sign of a recovery, 29,000. That broke. It was thinking about bouncing back up, but no, it's going down, right? And now we're hitting. This is the level. Now there's a saying that says, "Don't fight the Fed." So I wouldn't fight the Fed. I think a lot of people, and then there's a we put on our daily briefing today. There's some guy holding a lot of he might get margin called. There's a lot of leverage with Bitcoin. You know how the collapse of the housing market happened with the Lehman Brothers and everything? I think we're going to see something like that with Bitcoin in crypto. We already see Luna and then Celsius get hit. And then we have now Tether. People say they're okay, but you can see the uncertainty here and the reason why we need regulation for these because I mean people are losing their money. So if I would say, I personally I would throw in some on crypt. For me, I would do it at around 12,000. 12,000 would be a great price for me. I would go in 12, 13. Cheers, right? I would say that and hold that for a good 10 years. But yeah, someone check on Salvador, man. Check on the president. Is he still trading Bitcoin? Jesus. Does Moomoo trade crypto? Yes, I believe so. I believe Moomoo does crypto. Crypto trading. So it does it's adding crypto, and that was a long time ago. So yes, it does do crypto. Um Now I personally like stocks, but you know what I mean? That's my preference. But people love it. People love crypto. If the people want it, that's it, right? So I'll cover it. But you guys have to understand, I'm more of a value investor slash a little bit of a, Kathy, it's not even Kathy Wood philosophy. It's just growth investor. I'm like halfway between that. So I like to trade both sides. So there's that. Oh yeah. So I'm sorry. Let's look up ELMS and let's see what. In fact, actually, what you can do is now you can effectively go directly in our Mastering Stock Market course, and you can go here in our technicals and fundamental data. And let's go here and go to technicals and fundamental data. And I think you could just type it in on here. Yeah. And we can look at the financials directly from our Al Stock Trades website. So we can go into the financials and we can see what's up with them. Gross profit, revenue. Yeah, they only had $136,000. Not much information. Yeah, I don't. When did the SPAC? When did the SPAC come online? Let's see if Morningstar has anything on them. Nothing. It's empty. I don't know, man. Yeah, you got to look at fundamentals, man. Fundamentals will protect you from any damages that come because companies don't care, man. They'll take your money. Yeah, I don't know. Net debt. I don't know. If you look up total assets and liabilities, yeah, that's just a weird one, man. Let's take a look at. Yeah, I mean the current ratio. Nope, there it is. Current ratio 0.51. Whenever you have a current ratio below 1, they can't satisfy their short-term debt. They just weren't able to get funding. Bankrupt. Done. Yeah, you got to use fundamentals, guys. Fundamentals is crucially important. This here is our part of our Discord. It's all the software that we have, including the brain machine that we created. It's only as low as $10 a month, so we try to make it affordable. What do you think will happen to the financial sector specifically? I have been looking at. I made a video about that, about the financials, about what will happen. Let me see. Healthcare and technology. If you look here, where's the financials? Do I have financials? Yeah, the financials don't do so well during times like this. I don't think they're gonna outperform healthcare and technology. Now, again, they are going. I would say in the beginning terms, within the beginning parts of the interest rate hikes, are going to do well. But I mean, right now, I think value is like value trap, and I think deep value, It's what, is, I think, is in growth in tech. Elon is not selling his crypto positions. Well, I mean, he doesn't have to. I mean, you know what I mean? But people are, and that's the problem with crypto is you get a bunch of these folks that bought in at highs, and they're just liquid. I mean, people are just liquidating. Even the ones that got in low now, they're going to start liquidating, and there's a lot of leverage. And also he doesn't honestly need to sell. Most folks do, especially as things get expensive. Does Moomoo allow you to create a digital wallet with your crypto? That I do not know. I do not know. That I'm gonna have to ask. In fact, I'm gonna screenshot your question here. There, I'm gonna screenshot your question. That I don't know. I really think that people that are selling Bitcoin don't understand it. Yeah, of course they don't. Yeah, dumb decisions, but good to learn young. Absolutely, absolutely. There is no dumb question as long as you're asking. No, absolutely. We are going down low, and very low, but better days will come too. Absolutely. In fact, speaking about dumb and smart and dumb and all that, we have dumb money here. So wait, nope. Look a little lower. This is the most recent dumb money, smart money. It's so funny, guys. Dumb money at the sign of weakness. They're like, peace out. Bye-bye. I mean, just look at the fluctuations. Just drop. They're stupid. This is their IQ. This is literally a replication of their IQ. Just boom, drop, and then smart money, which is in blue, they were just stealing more shares from the goddamn retail investor. Just gets me angry, when I see this because these, I just feel bad for these folks, but you gotta education. You got to educate themselves, man. But anywho, I hope this was an informative video. This was a lot of information packed very heavy. I'm happy you guys received it well. And if you look up our top borrow stocks, short squeeze stocks, and our gamma squeeze stocks, we called out Redbox young, and it moved like 500%. So the results speak for themselves. We're doing really well. We're excited for the group we have. A lot of profits are rolling in, and we're doing well. Hopefully, Clove. Recession is great for making money too, but my investments are already. Yeah, and then you whatever you can work, get more money, increase your net income, and work as much as you can, decrease your operational expenses, and make sure you do your due diligence before you invest. And you do some I take a long time. God, I do a lot of research, guys, but you have to if you're managing your own. I want to be better than the financial advisor. I want to be in the top. Again, I'm going into neurosurgery for a reason. I'm very competitive. I like the stress and the challenge. And I find the same challenge here also trying to pick your own stocks. But a lot of research has gone. I mean, just look at this. You think the normal retail investor does all this? Sadly, no, because they don't teach it. But which is why we started our platform. My goal is to, one of these days this will be common knowledge, and I don't think it will be, but I hope I'm going to make it my mission to teach and drill the point to you guys. Hey man, God bless you, and I appreciate you supporting the channel. It means the world to me. Hope one day you can make a video on how you actually find good businesses to invest in. Yeah, no, we'll definitely will. It's it'll be in our mastering course on how we essentially use, like, for example, if you go back here, we actually have a stock screener, and essentially there's different criterias you can use to actually screen for undervalued stocks. And we can use these things and tools. And then once you use them, then you would essentially go into your intrinsic value calculation, which then you would type in the values of the stock to look at the bull, base, and bear. And then you would want to take a look at maybe the stock that you would normally have. Let's say Clover is at $100 now, let's say. And we want to know, should we sell Clover for this other stock? And what is going to be the capital gains tax? And what is going to be the growth rate of the other stock versus the current stock? And then let's say you want to look at that stock to see if it's still doing good. You want to look at it's the stability, its stability, and that's when you look at the book value, dividends, and everything. So we definitely have some stuff here as well, teaching you both the Buffett way and Kathy Wood way, looking at the Buffett indicator. And so a lot of things are being built with our course. I'm very excited. There's thousands of hours has already been injected in this course. But very excited to share it with you guys. This is I'm really excited. All right. Well, that's about it. I think that's it. That's all I had to say today. Yeah. Al, what about Clove at the end this year? So it's hard to predict market cycles at the end of the year. But I would say right now the market really enjoys the Federal Reserve wanting to essentially increase basis point hikes. I think we're going to do another 0.75. We want to see CPI flatten before it actually starts going down. So let's go to our economic calendar. Okay. So if you go to our economic calendar and we go to June 10th, which is where the CPI data, and this is all part of our mastering here, you can see that the average, and if you don't know what CPI is, you can click on it and you can get kind of an understanding of what it measures, along with all the other thousands of indicators that we use. So the forecast was 8.3, but it was at actual 8.6. When we see 8.6, 8.6, 8.6, and then another, and then all of a sudden 8.4, we want to see it stable and flatten out. And that's when the Federal Reserve, I believe, is going to stop with its 0.75 basis point hikes and all that and start going down. Kathy Wood said we were close to about, who know? I mean, honestly, we'll see right now. But from the looks of it, I think we still have more to go. If you look at, large caps versus small caps, we are hovering here. We're going to fundamentally, I would say for these tech stocks, I would say we're near close to a bottom. If you look at Clover, the devil and thunder and hurricane came and the thing wouldn't even break $2, man, or close to it. Right. So I think we're getting there. I think we're getting there. In fact, let's go to stock research and let's look up. You see, even the projections. Our projections are started. Wait, hold on. Let me see if this. Yeah, this is today. Even the projections has started to creep up using a Monte Carlo machine style learning is starting to creep back up. Let's look at Clover on the minute. Let's do the hour chart really quickly here. How many times has it been rejected at around the $2? Rejection, 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 rejection. I mean, guys, this is like triple, quadruple bottom. So I think we found the absolute area where investors are like, I'm not selling this. Yeah. What do you think about Biden administration blaming oil companies' profits for gas price? Oil companies don't invest in new refineries, U.S. Honestly, my response is President Biden shouldn't have closed down the Keystone Pipeline. Just like we teach our children, you cannot run before you crawl. President Biden should have taken that advice. We cannot transition into clean energy without having something stabilizing us during that transfer. It's going to hurt a lot of people. It's going to hurt a lot of Americans. And a lot of people are becoming homeless now because of these decisions that our government has created. I definitely don't like it. I'm right now very mad at our administration. Like all of us, I'm not happy. I'm not happy. Do you think short? I mean, here's the thing, guys. Here's the thing. Listen, okay. Listen, okay. All right. It's one thing that a freaking stock market portfolio goes down. I don't care. I'm invested in the long run. It's another thing when I see my American people in the streets, when I see people that can't afford their rent because prices have gone up, right? That to me is unacceptable, right? We put you in office to essentially, you know what I mean? For that reason, I don't want to get political. We didn't put you in office to change the world, right? We liked how things were. We just wanted a little bit of tweaking of what the kind of look at the generic what American people wanted, right? I am extremely upset at this administration. Extremely upset. He let down the American people. I don't give a shit about the stock market's price fluctuations. I care about the people, and the people are suffering now. People are freaking hurting, right? And that's so effed up, right? They have the audacity to say oh, the economy is strong or Americans can handle it, right? Who says who? The person who's being paid by taxpayers, right? From the people that, again, I represent historically marginalized populations. We have a food program that helps with low income areas. The people that I see are not good right now, right? They're about to be evicted, right? Okay. So do you think short interest around 29 million? Do you believe much higher? I would have to take a look at the Ortex data for that. But I think at this level right now, who's ever shorting the market, especially short like small caps, unless they're going to go bankrupt, is definitely playing with fire. I've barely got any more cash, but honestly thought Clover was going to break too. Didn't it get the catch to buy? Yeah, no, it's I honestly didn't anticipate it lasting this long, but the more, longer it lasts, the better. Honestly, I mean, this is this is so good. I mean, remember, the company's making money right now as we're speaking, so it's good. Well, guys, if you like this video, please consider liking, subscribing, and hitting that notification bell. If you hit that like button, it actually helps with the YouTube algorithm. It actually helps our channel. And also, please don't forget, I repeat, do not forget to, I don't even know where the hell is that cow, right? Don't forget to sign up for Moomoo. There'll be a link down below. You get literally 10 free stocks. I repeat, 10 free stocks. I put up a link here and I'm highlighting it. Please don't forget. This is not something they're gonna keep. They said that it's like some type of summer deal they have. So I mean, a company's obviously losing money to give out 10 free stocks. So please sign 10 free stocks. Okay. And hopefully you might be able to get Tesla, which I honestly doubt. They're not going to be giving this is going to be rare, but they might give you some AMC, maybe some DraftKings. You might be able to get some stuff like that. But whoever gets Google or Tesla or Apple, definitely put it in this comment down subscriptions. That'll be pretty cool to see. And you guys, God bless you. I'll see you on the next one. Love you guys a lot. And I can't wait to share with you guys my knowledge. We set up the microphone. We're ready to go. And it's time to give you guys my 10 years of experience. The mastering course is going to be a thing of a beauty. I can't wait to, it's going to be beautiful. All right, guys. See ya.